Happy Friday, everyone. We've gotten to the last day of the week for trading. We also have gotten to the last day of trading for the month of August. Believe it or not, time flies. We've had a lot of stuff happen in August. This week, specifically, we had Nvidia earnings, which were huge, and we reviewed them on Wednesday evening, afternoon, and the stock traded a little lower. We are going to live stream. We're going to catch up on some earnings that happened yesterday and maybe one or two that's happened today, this morning, and just take a look at some stocks, take a look at the market, see what's going on, see how we're going to close out the month of August. And with me is Daryl. How you doing this morning, Daryl?
Doing wonderful, Victor. It's good to be here. Good morning, good evening, everyone.
It is great to have you. I appreciate it. We have a live stream here. It's I really enjoy doing it because I like analyzing stocks, companies, fundamentally looking at their businesses, looking at their revenue growth, fundamentals like profits, free cash flows, look at their balance sheets. Make sure it's like buying a house with good bones, if you know what I mean. The house is in a good neighborhood. It's got very good structure. Maybe it needs a little bit of paint. Maybe it needs some new flooring, but it's a solid investment. That's what I look for. And Daryl, he looks at the charts and he tells us what's going on in the market. Is that stock setting up to trade higher, trade lower? What's been going on with investors' activity around that particular company? I think it's a real good combo. I enjoy doing this because not only do I enjoy talking about stocks, but then I enjoy listening to Daryl do his analysis. I hope you enjoy it as well. I hope you get a lot of value out of this stream. So let's take a look at the market, and then we're going to get going. It looks like Saeed, a regular. How are you, sir? I believe you're in Europe, and I'm going to wish you a nice afternoon, I guess. You're closer to the weekend than I am. I hope you have a nice weekend too. Mike, the dividend investor guy. I think Mike wanted to look at Marvell and symbol LNTH. Glad to do that. And very good to see you, Mike. Hopefully you had a good week in your trades. So the stock market, Google has been standing up tall lately. They've had a good month, and I think it's going to go higher. The stories that kept the Google stock back, I think, are being proven to be not completely true. AI is not going to replace them, wholesale replacement of Google search. I think there's going to be a transitionary period, and I think there's going to be an evolution of how we search for information, and Google is going to be a big player in that market. Plus, the antitrust activities were supposed to conclude at the end of August. Well, we can't get any further into August than the last business day of the month. Nothing's happened yet. So maybe those stories are beginning to lose some of their bite. And Google has been rallying. It's probably the best discounted stock out of the 10 most valuable stocks on the exchange. Google is right up there with really good PE ratios compared to the others, very good discounts. They're growing really well, even though they're a massive business. So it's good to see Google stock going up. Something that is a little bit of a surprise is Nvidia traded down and Broadcom went up. These are two semiconductor companies, and you would think that they would go in the same direction, but they didn't. And some other semiconductor companies went up a little bit. So that was caught my attention, but I don't know what's going on there. The software space is kind of picking up a little bit of a tailwind. They could probably thank a couple of software companies, but most notably MongoDB, and those guys ripped higher this week. Collectively, MDB went up more than 40% over 2 days after they announced earnings. What also helped is Okta announced earnings, real good earnings. Software companies have been coming in with very good earnings, and I think it paints a different picture for CRM, ServiceNow, and others, that the market's like, whoa, I guess those businesses are good to have. They have big margins, big profit, good cash flow, high growth. Well, geez, in my book, that's a really desirable company. So I think the software space is had had some good days. I think seeing very good performance. So I applaud those businesses for performing really well. ServiceNow is going to announce, excuse me, Salesforce is going to announce their earnings next week. Look forward to that, I believe, on Wednesday. So we'll see what they have to announce, and then Adobe is going to announce next week or the week following. Staples were down yesterday. That means it is risk on. Investors don't want, good, steady, slow, appreciating stocks that usually pay a dividend. They want to jump into some of this growth. They want to buy some of this growth, some of this growth, some of the Google growth. They want to buy into growth, and certainly showed. Healthcare also sold off. Again, this is a sign to me that it is risk on. Let's go buy some of that growth. Now, I think that the market is a little expensive. Wouldn't be shocked if in September we take a little medicine and maybe have a 5 to 10% overall sell-off in the market. We'll see. It tends to be seasonally the month when that happens. We'll see if it happens. All right. So, any thoughts on this week, Daryl, of what you saw? Anything that surprised you? Anything that's interesting out there?
I don't follow too many of the software companies. I own one or two. So some of those were a little surprising, although I hadn't looked at any of the earnings previews on those. Nvidia is kind of following what I thought would happen, at least for a few days. I don't think it's going to stay down at all. But really, I wouldn't say there was any big surprises.
Yeah, I think the Nvidia earnings, uh, I think it was fine, and
Yeah,
if it
yeah, they
didn't
look
sell
good.
off, I agree with you that it could really establish kind of a new low, so to speak, and then from there it trades higher. So looks like Sam is on. Wants to look at AppLovin. Glad to do that, Sam. I've got that on my list. We will get that done for you. Thank you for joining. All right, so let's take a peek. Dell announced yesterday, and oh man, this stock's selling off. What's going on? So this is a stock that over the 1 year it's up 19%, year to date up 16%. It's trading lower. So right now, the one thing that it's either an observation or I'm just pointing it out. All these companies are like AI, AI, AI. And overall, when we look at earnings from Dell, I'm sure they've got it in here already. Yeah. See, they have very good growth in overall, and they're going to label it as AI and data center because Dell has been in the data center for 20 years. It's not like new to them, but they really tout it. This is very good growth. I wonder why it's trading down. I guess they're guiding lower for Q3. I don't like hardware companies principally because they don't make a lot of money. Oh wow, margins went down. They typically are like low 20s, and you've seen a lot of stocks with me. I get excited when it's high 80s. Like, yeah, that's a really good margin. When we're in the 21%, it's like, geez, that's even worse than automotive because this is really competitive and it's in a big way a commodity product. You're putting boards, CPUs, hard drives in a case and trying to sell it while 20-year competitors are doing the same thing. So you don't have any differentiation, a moat, a competitive advantage. So these guys are really their margins are down. I could see that investors did not like this margin hit, which affects their profitability and affects their free cash flow. I do like their top line growth, but the profit drop is a concern. Um, if if the AI boom is really a boom, it should be like, like Nvidia to some extent has also seen its margins go down, but it should be where you have pricing power. You're selling more while you're raising prices. That's a double positive. So Dell is trading down. Do you have any charts on Dell?
I have a pre-market pulled up. So like you mentioned, they are selling off and it doesn't seem to be getting any better. Let's go look at a 1 year. HPQ did pretty good yesterday. They were down after they announced, but they ended up being up 4.57%.
Wasn't that interesting that HPQ on the announcement went down, and then during the trading day yesterday it went up? It was like
Yeah,
almost a 10 full percentage swing.
yeah. That candle doesn't look very healthy to me. You see how wide or how long those tails are, especially on the bottom.
Right.
So, yeah, I don't know if this is going to last based on this particular candle shape.
Hmm.
So, I don't know how long it'll last. It's something I'll have to keep an eye on. Okay, so let's go to Dell 1 year chart. So, it looks like they were pretty much sitting at the high that they achieved in November of last year. Really, really close to that. So for the past 9 months or so, they've been trading under that high, reaching a low of 65, about the same time every other company did on April the 7th, following the tariff announcements on April the 2nd. They have had a really nice run back. Let's see what that was, 110%. So that was a really nice run. That may explain why they're pulling back a little bit.
Hmm.
Um, their RSI is sitting just right above the 50 line. It does look to be increasing at the moment. PPO's been positive for quite a while. They went positive at the beginning of May. One of the things that we've talked about on many of these shows is you see this price increase, but you see a decrease in the PPO, and we also see a decrease in the RSI. That's called a negative convergence, and it means you ought to raise a yellow flag and keep an eye. But wow, look at that run. Even from there to there was still 30% while these divergences were in place. But that is something to just keep an eye on. Um, Their accumulation looks like it peaked out in October of last year, neared the peak back in August, and it has been decreasing and leveling out a bit, but the money flow is still positive. They've outperformed the S&P 500 by 5%. Looks like they're dead even with the technology sector, just barely above 0.03%. They're slightly outperforming the consumer or computer hardware industry group by 16%, and that industry group is underperforming the S&P 500 by 11%. So, trying to get any indication where I think the price might go, and I really having a hard time figuring that out. Let's see, they haven't tested their 50 since back here. Um, they spent most of their time below the 50-day moving average. So I don't know. I don't know where they're going from here. They may just continue to trend sideways.
Yeah, the company, right? It's a well-known company. They've been around for a long time. And it just like the fundamentals of the business is not something that I would love to own for a long time. It's just that profits are not good enough. I think eventually um, it'll just go sideways or probably trend down. But I was surprised that that kind of growth is met with a sell off in the pre market. That the growth is good, but the stock's trading down.
Maybe people are thinking they just have a lot better options.
Yeah, that might be the case.
Yeah.
So the next company we're gonna take on a channel member request, which is Marvell. I think Mike, the dividend investor guy, wanted us to take a look at this. This is a company that announced last night. It's also selling off. So they, along with Dell, are selling off. This one a lot more dramatic, down 14.7. We're about 13 minutes before the market opens. This stock is down. Wow. And it's down considerably this year. How about the 5 year? It's had some moments. This stock really rallied in 2020, early 2025, and then it really sold off. So these guys, it's a semiconductor company. They do data infrastructure semiconductors, data center to the network edge. I would think that this is right in the heart of where a lot of demand is happening. So I'm surprised that they're not flourishing. Let's take a look at the stock a little further. Market cap 66.5, revenue 7.2. Okay. Forward P looks good. Like if it's growing and it has a 24 PE and high margins and cash flow, that looks pretty darn good. Analysts think it's discounted. And when we look at the quarterly, man, that growth looks fantastic. 57% growth, and the stock market's selling you off. What does a company have to do? What else is out there? This one's interesting to get our heads around because that doesn't make sense. Now, the gross margins for Marvell, I don't know Marvell all that well. They don't have terrific margins. They have good margins. These are okay. We just saw Dell, trying to compete with 20% gross margins. These guys are at 50. If we look at Nvidia, it's going to be about 75. If you look at Astera Labs, it's 85%. So these guys are good, but not great. But it's still very decent. And cash flow is at 414 million. Okay. So I'm looking at pretty good numbers here. I'm not looking at like what the heck's this stock doing rallying so much. They're not worth it. I'm actually thinking maybe they are worth it. Let me take a peek at their forecasts. Are they supposed to keep growing or are they going to begin to slow down? We're in this year. They call it fiscal year 2026. It's going to end February 1st, 2026. We're already in it. It's supposed to grow by 45%. Stay growing into the year that starts on, call it February 2nd of 2026. They're going to grow at 18%, slow down, and then start growing again. You see the cyclicality of this industry. This is normal. You grow, slow down, grow, slow down. And this looks pretty decent. This is pretty good. I like the growth. 18% would be good next year. That'd be a pretty big number on the top line revenue of almost 10 billion. So this one's interesting. I'm going to work on, I don't have a valuation, but I was beginning to create one. While I do that, could you show us the charts on Marvell?
Sure. So when looking at the 1 year chart, they traded up to 127 back in January and then as low as 47 during April. They have had a pretty nice run, about 56%, so not quite as good as the other one we looked at. So they're going to drop down to about 65 this morning in the early trade. That looks to be around support that I saw in May. So they may hold that there. But this looks like it's one that's pretty much going to trade sideways for a while still. Remember yesterday I mentioned when they do drop like this, if they can hold that 40 RSI, and they actually did a couple of weeks ago. I don't know if they're going to hold that when they drop to 65 today. But normally when it drops to an RSI of 40 and holds and starts building up price again, that's usually a pretty good sign, rather than back here where they were below 30, which shows a lot of relative weakness. So they're sitting at an RSI of about 56. They have a PPO that's negative that looks like it could, well, it's not going to cross in. It's going to be negative today because of the price drop. If it had kept trading with this action, they probably would have been back positive today. They are relative strength and relative momentum to the S&P 500. It is not as strong as the S&P 500. The accumulation has not been very good since May, even though the price was increasing. There was a lot of distribution on the stock. They also had negative money flow for quite a while. Looks like from June until the second week of July, they were negative money flow.
Mm-hmm. So money's leaving this stock. It's just
while
not.
The price was going up, which is interesting.
Yeah, interesting. So let me show you my.
It's underperforming as well.
Interesting.
Yeah.
Okay, let me do one more thing and then I'll switch over to my screen and show you the valuation on Marvell. So Marvell is it's having a very good year. It's going to have a follow-up year that's going to be pretty good as well. And I put that type of growth into the cash flows for the company and discounting them by 8%. Some people could argue it should be higher, and I could understand that argument because they do carry some debt. They are cyclical, meaning higher risk, because their business goes up and down. And some of these slow periods can bring this company to greater default risk. Having said that, I'll leave it at 8. It's still priced 26% too high as we speak. Now, today's sell-off is going to bring the stock closer to intrinsic value, but it's still priced too high. And the momentum, as you covered, it's not a positive thing. It's actually a negative thing. That momentum is not in this stock. What's interesting is this is a data center stock. This is in the data center. This is kind of inside the party of the AI revolution, where you're seeing Nvidia flourish. You're seeing other stocks flourish. And this one's not having a good time at the party. It's not priced right. It's getting sold off. The margins are not great, as I covered earlier. When we look at earnings per share, the stock is fairly priced as I speak. Now, stock market opens in 4 minutes. Pretty soon, this is going to show a discount based on earnings per share. But combined, 17% priced too high. And that just doesn't float my boat. No momentum. This thing, if it were to go down, just using my imagination, right? I don't know if this is going to happen. But if it came down maybe to $50 a share, $55 a share, maybe it gets interesting at that point, because I could see it just be too low and maybe that data centers are going to keep needing their technologies. Maybe at that point it might be a stock worth considering. So I'm putting it on the watch list, and we'll see where it goes from here. That's Marvell, gonna open up about 15% lower. That is a tough day. Tough day at the office for them. Let's move on to AppLovin. It's a request that Sam made. AppLovin's been doing really well. Year to date, 49%. 1 year, 435%. That's getting it done. that's that's like getting it done 3 or 4 times. And over the 5-year, it's a decent looking stock any way you slice it. It has been kind of, for a while, it was just kind of going sideways, but it has decided to really trade up. If you recall, AppLovin was the target of one of these famous short sellers that puts together like a whole report. And they, put their thesis out there on why AppLovin is priced too high. They had a theory, a story that, hey, AppLovin's using user data inappropriately and this, that, and the other. And maybe now AppLovin's shaking off that negative vibe that short seller put into the stock. And that really happened months ago, like back here. This is where it started to happen, I think. And now maybe they're shaking that off. And I'm an AppLovin stockholder. I really like the business. What I love about the business is when you grow 78.9% and you accelerate your growth, I warm up to you real quick. I go, hold on a second. You are pretty good size now, and you're accelerating your growth. This is the quarterly. Top line revenue tells me, are more customers going to AppLovin? Do they like AppLovin? Do they like the services they're getting from this business? Yes, yes, yes. This is the data. The data is telling me that. So the top line revenue is fantastic for AppLovin. And they're beginning to get pretty big, and they are the leader in ad tech. So businesses now do most of their advertising on Facebook, Instagram, even TikTok, YouTube TV, YouTube, Amazon Prime, all these streaming channels and internet content providers provide content, Reddit. And AppLovin enables a company to optimize their marketing dollars and get the most out of that marketing. So these guys, it's an addressable market that's massive. Will continue to get bigger. Will continue to just be a very fertile market for them. AppLovin's terrific stock. And the only thing that is a reality is everybody thinks it's a terrific stock. So it's not like, oh man, I think it's a terrific stock. Nobody else agrees, and I'm going to buy it way down here and ride the elevator all the way to the 99th floor. Nope. Everybody knows AppLovin's a really, really solid business. So is it discounted? Well, I looked at AppLovin. I looked at their free cash flows after their last earnings call. And here's what we got. We got Google. Come on, Google. Put another server online so you can update my lookups. Oh, shouldn't have done that. All right, let me look for AppLovin again. See if Google's going to work for me. There we go. So right now, as I speak, and based on the price, I think the market opened. The stock price still offers a discount. So I bought into it. There was a little bit of a better price recently, and I bought at this little trough here. It's already risen. This one here is gonna be one you got to monitor very closely, because everybody knows AppLovin's a good business. It's like everybody knows Nvidia is a good business. Everybody knows that Microsoft's a good business. And now everybody's beginning to know AppLovin. It's a really interesting business. So I bought some shares, and I don't want to chase this thing, too far up. But if this thing sells off, like if it has a day where it sells off by full percent or two, or it has a bad week, I'll snatch up shares. I would love to own more shares. I owned AppLovin about a year ago, and I don't know what got into me. I sold the stock, made money, and then I thought, well, that wasn't all that bad because it kind of hit this period here, and then it hit this period. So I thought, oh, okay, well, I didn't make a mistake, but boy, I wish I had those shares back because they'd be worth a lot more now. But hindsight's 2020, and we have to invest looking through the windshield, not looking at the rear view mirror. What do you think of AppLovin?
Well, it is trading just under its all-time high. This is not one that I would necessarily buy. It doesn't pay any kind of a dividend, and I am an income investor at my age. But based on your valuation and the price chart setup, I would not be opposed to stepping in with a good stop loss in place. So if it does fall out of bed, you can get out without too big of a loss. But it definitely looks like it has the potential to break out above this level and maybe keep on its run. I would definitely watch it in September because let me look at the relative or the seasonality for September for this stock. Oh, it actually does pretty well in September, so I take that back. You're not going to have, from a seasonality perspective, you're probably not going to have a good opportunity in September. So,
Yeah, maybe in September, advertisers are getting their game plan for the seasonal peak of retail, e-tail kind of commerce related to the holidays. So right now is when they're kind of probably working with AppLovin, priming the pump, so to speak, to try to get a good Black Friday set up, a good Christmas holiday season set up. It might be the period of when that happens.
well, I would not be opposed to stepping into it right here. Let's look at some of these other indicators here. So we have an RSI that is almost at 70. I think it's currently sitting at 68. But look at this. I've heard people say they don't ever buy anything over 70. If you did not buy here, I mean it ran for 3 months above 70.
Mm-hmm.
And you went on a price run from 300%. So if you have a rule like that, I would rethink that rule. But I'm not afraid to buy when the RSI is at this point, if it looks like it's getting ready to break out. But let's continue on. So their PPO is positive, and they did have a bullish crossover in positive territory. So that's good news. Their relative strength and momentum compared to the S&P 500, their relative strength is higher, their momentum is slightly lagging. Look at the accumulation. It is at not an all-time high, a 52-week high. The money flow is positive and looks to be growing. And then you talked about the stats here,
Yeah.
but it's been blowing stuff out of the water. This looks really good to me. This looks like it could break out and maybe go on another run here. If I were doing it, I would just put some stop losses in to make sure that you
And
and I
AppLovin,
would I would go with not maybe a full position, but maybe, 20% position or so, and just watch this one for the next few weeks.
So the price for AppLovin today, it was slightly negative. Now it's slightly positive. Market just opened. So I'm going to watch this thing. And again, if it has any kind of, I might even buy it at this price. I
I
think it
would
looks.
not be opposed if this were in my bailiwick,
Mhm.
I would not be opposed to buying it here.
Yeah, very good. Thanks for the analysis there. Appreciate it. And kind of add a little bit of one more reason why I want to accumulate some more AppLovin shares. Appreciate it. Before I forget, I wanted to thank Meredith Page. She became the latest YouTube member of my channel. Really appreciate that. We have a good number of members now. We have a really good audience when we have member calls. We definitely have a really good audience on live streams. Thanks everybody that's a member. So really appreciate it. I think it just makes the community more valuable. And there's really good perks associated with the membership. Meredith already got me an email, so I've got her set up with everything and hope that she, along with everybody else that's a member, gets a lot of value from being a member. So thank you very much, Meredith. I hope you have a terrific day. All right, so we went over Marvell, we went over AppLovin, and we touched on Nvidia. There was one more request that was put out there which is Lantheus Holdings. This is a healthcare company. It sold off quite dramatically. I think their revenue, and before I use memory, let me look at their data. So, diagnostic and therapeutic products to assist clinicians in diagnosis and treatment of heart cancer and other diseases. Okay. So it's a small cap, 3.77 billion, revenue of 1.5. Their growth. This is the problem. Houston, we have a problem. When you peaked at your growth rate and then you're starting to go negative, that's not good. That means that is this going to really slow down? Or are you going to flatten out? You're no longer a growth stock potentially. And that could be a big problem for some investors thought they were buying into a growth stock, and they're not buying into a no grow, slow grow stock or slowly get smaller stock. It has a PE ratio of 14, P of 10. All these things are not out of the equation or out of the story with these guys. If you're not growing, okay, you got a problem. Analysts, I think, are behind on their price targets. This is way too optimistic. No growth. They do have good margins, if I recall. Gross margins in the 60s. They're not great. They're good. Free cash flows there at 431. I should have a valuation on them. I don't. I guess I took them off because once I saw that slow growth, it was not a stock that I thought had a bright future. If they start growing again, now we're talking. But no growth in this space with healthcare, small caps. You have 20 to 30 growing companies to choose from that are growing really well with even better margins and better cash flow and so forth. I think that's why I took Lantheus off my watch list. Is, man, I know of 20, 30 stocks that look terrific. I own 5 or 6 of them that are terrific. So there's plenty to choose from. And I think that's also going to be a headwind against Lantheus is, guys, if you don't grow, you're not going to be relevant. Other stocks are going to take investments because they deserve them. They're growing. They're exciting. They have great margins and so forth. So those are my comments on Lantheus. Did you have any charts on this stock?
Yeah. it looks like a pretty wild ride if you're in it. They did have some buyers step in when it dropped here, so quite a few buyers stepped in, which also was the low back in January. So the money flow really shot up, and the accumulation distribution also shot up. But the PPO's been negative since the beginning of May, and it did go positive maybe for a couple of weeks. But we did have a bullish crossover, but it's in bearish territory. The RSI is pretty low, sitting at 38. It did get down to 22 or so on the 7th of August. Underperforming the S&P, underperforming healthcare, underperforming the industry group, and the industry group is underperforming the S&P. I'd go find something better.
Yeah, I think we agree on that one. So here's a suggestion from Shadow Guy on Brookfield Renewable. If there's somebody out there that likes dividends, likes income, I think this is a good idea. This is a renewable utility company. They're trying to get assets around hydro and wind, solar at scale. Okay. So their stock's doing well for the 1 year. I mean, getting paid that dividend, seeing your stock go up, and that's year to date, not the 1 year. Both look really good. And this is relatively new stock. So now utilities are really getting some big tailwinds, some big support from the whole AI infrastructure build out, where they're going to need this power. They're going to need this power near data centers so they can feel all this technology that's going in those data centers. GPUs are energy, they need a lot of energy. It's like having a high performance car. Yeah, it goes really fast, but if you look at the gas gauge, boy, it goes down really fast. So that's kind of the reality there. But these guys, what's interesting is their revenue is declining. If we're in a market where power is in greater demand, why are prices going down? I'm scratching my head on that one. Interesting. So, but it's been a good stock for the dividend. If you price this stock based on the dividend, and let's see what analysts say, it's a little discounted by 3%. And analysts are kind of in the same neighborhood of valuation, right? The high is 39, the low is 31. The range is not that broad, right? And when we look at, so I don't see where they're getting this number. The data doesn't match the data I just saw. So yeah, I'll have to. I would research this. This decline worries me. It's like, why are they declining revenues? I would have guessed before I looked into this stock. I've never looked into it, that they'd have growing revenue, but that wasn't the case. They've had a little bit of a sell off, and today they are selling off a little bit. Any thoughts on BEPC?
Well, they are trading above their 50-day and 20-day. The 20-day was declining. Now it's looks to be rolling over. They broke out above their high from October of last year, back in July. Their RSI is kind of sitting right in the middle. Their PPO is just in bearish territory. Accumulation starting to fall off. Money flow is negative at the moment. And they're underperforming. So in this, not necessarily equivalent, but here's a closed-end fund that I invested in. They pay a 6.97% 8% yield, and I'm up 18.3% since I bought in a little earlier this year.
Nicely done.
This is a closed-end fund, and I always keep an eye on the net asset value, and it's a little right at its net asset value. So I'd wait for a little pullback and continue to look at the net asset value. But this is a dividend payer, so I'm an income investor, and this one has been really good to me. And then one other one kind of in this same vein is the BlackRock Science and Technology Trust. That's also a closed-end fund. Let's see, this one pays a 7.5% dividend, and I'm up 11% in that one. Yesterday, it reached an all-time high. It's pulling back a little bit today because tech looks to be selling off. Let's take a quick look at Nvidia intraday. That's what the intraday chart
Yeah, it's
is looking
down.
like.
Nvidia's down 3.41% as I speak.
Yeah, my option that I bought before the earnings is up 24%.
You still own that?
Yeah, I watched it all day yesterday, and
Yeah.
when I look at the intraday, I know we're getting sidetracked here, but let's look at Nvidia here and go to the candlestick chart. This candlestick worried me a little bit. So even this was on the day of the earnings, and I even shared this with everyone on the live stream Wednesday when we had that live stream.
Mm-hmm.
We shared that, and this is a candle that indicates that the price is going to have a tendency to go down. And you got to kind of wash that with the earnings, but it still indicated that it could go down. And then look at this candle yesterday. They couldn't make up their mind
Yeah.
whether they wanted to buy this one or sell this one. So they have a long tail to the upside, a long tail to the downside, and it ended up within 1% of where it opened. So then today it was looking like it was going to be down in the pre-market, and sure enough,
It's down even worse in
yep,
intraday. But
yep,
it's early in the day. It's early
it
in the
is.
day.
I'm going to keep an eye on this one.
Let me share the heat map. So Nvidia is down 3.2%. So is Broadcom. I would say most semiconductors are down today. Microsoft's down, and software application is up a little bit for the most part. Uber is down, but I don't consider that a software application company. That's a logistics company, right? We're getting rides from Uber. We're not getting software. The semiconductor materials and machine delivery companies are down. So there's Dell. And then we saw Marvell was down quite a bit. Meta's down a lot, 1.5%. Okay. Netflix is down. Amazon is down. Google's holding their price. Berkshire's up. The financial space is looking good today. Looking good. Healthcare is looking good, standing up. So yesterday, the heat map that I showed when we started the live stream had this pretty much red all over, and we had consumer staples red all over. Now it's green all over. So it's like investors were like, we were a little too optimistic yesterday. It was risk on. Let's take some of that risk off the table. I think I'm going to buy some Procter and Gamble, some Coca-Cola, some Pepsi, and kind of go a little bit more staple, safe with the dividend, or go into healthcare, buy some of these pharmaceuticals or health insurance payers. Our friends over at UnitedHealth, let's take a look at UnitedHealth when we have a minute. It'd be interesting to see what's been going on with that stock. I'd love for you to go over the charts of UnitedHealth Energy is up today. That looks good. Utilities, for the most part, up. Real estate's up. So it's a rotation. You and I talked briefly about how small caps are performing well. They've had a good month, maybe a good couple months. That's good to see. It's good to see some of these small caps with terrific fundamentals get higher stock prices. That's terrific. So let me take a look at United Healthcare. That is a stock that I think is going places. It's certainly been places, but it's been in real bad places. It's gone from $600 a share down to 250, 237. Now it's back to 300. Today it's up while some of the big technology stocks are down. And this stock, I can show you the valuation. I think it's heavily discounted. I think it's discounted even better than that. And it has a recent kind of upswing. But I'd love to see your chart analysis on United Healthcare.
So over the last 2 weeks, after we found out that some super investors had stepped into UNH, the price went up and has pretty much stayed flat for 2 weeks. The 20-day moving average is moving higher. The 50-day still looks to be declining. The 200-day still looks to be declining. The RSI has been hovering at about 61 for 2 weeks.
Mm-hmm.
The PPO is in positive territory now, so that's good. It had been in negative territory pretty much all year. We had a few spikes above, but it's sitting above now. The relative strength and the relative momentum compared to the SPX, S&P 500 are both positive.
Mm-hmm.
We did have a lot of accumulation back when it hit these prices here. It's been waning a little bit since then, but looks to be about equal with what it was from April all the way back to September of last year. And the money flow has moved positive. It's actually in bullish territory right now, just barely. And yeah, we all know how it's underperformed, but it's looking good. I mean, it's holding its own.
Yeah.
I thought it could pull back to maybe about the 50-day after this big surge, but it's actually done better than I thought it would, because I thought it would drop back to the 50 at some point. I was going to pick up some more shares around there, and I still will if it gets there.
Very good. Very good. So let's take a look at Affirm. The stock is up 21%. So this is a buy now, pay later company. So it's classified like in the payment, fintech kind of category. And they announced their earnings yesterday after the market closed. Year to date, this one's flourishing. And the 1 year, it's doing great. Wow, really good. This is, at this point, a $30.8 billion market cap, revenue $3.2 billion. Forward PE, if they're growing, 42 isn't bad. Looks okay. And let me think for a second. Yeah, I guess that is their more recent quarter. They're growing quite well, 33%. Their top line revenue is getting bigger, so that percent for it to decrease is okay because it's getting bigger. So 38% over the trailing 12 months. This is a new business type that it's not necessarily a bank, it's not a credit card, it's somewhere in between, which is good because they could probably avoid some of the undesirables of a credit card business or a banking business and do better. Their margins are good for a lender, very good. Free cash flow margin is good. So this one here is looking pretty exciting. I play into this space by owning PayPal, but I can't say that PayPal has been a great investment over the last couple of years. It's kind of been a dud. But they do have a buy now, pay later program. Just my big concern around these businesses is this is going to be a success or it's going to be a failure. It's not going to be anything in between because you're lending out money and you're doing it through computers, algorithms that are automatically approving somebody. If it works, great. You're going to disrupt some other method. If you get the issuance of credit wrong, you're bankrupt. So it's like, whoa, that's a pretty good risk. So this is a high risk stock, and having a pure play is also super risky because Affirm doesn't have anything else to lean on. This is their single business. So if this is successful, great. If it's unsuccessful, we got problems, which is why I picked PayPal. And these guys have outperformed PayPal. So the better move would have been to buy Affirm, but here we are. I wonder how PayPal is doing today. Let me see if it's trading up on the news. Nope, just barely doing anything. And it's down for the year. So Affirm was the better investment, obviously. What do you think of Affirm?
Well, they were running up against their high before the earnings. That's what happened. They just reported earnings. Is that true?
Yes.
Okay.
They reported earnings yesterday after the market closed.
Okay. So they had traded up to their high that they had basically on February the 18th, which was the day before the S&P hit its high in February before the big sell-off. So the fact that it is broken out above that is really good news. They are overbought at the moment. So they were sitting at about 60 before the market opened, and now they're at 75. So they are overbought. Unlike the other company that we looked at, they don't stay in overbought territory very long.
Because they're
Okay.
small, unknown, not a
Yeah.
lot of confidence behind it.
Yeah. So they don't even stay for a week in overbought territory. So I'd be careful with this one at these prices. But if it pulled back anywhere close to where it broke out at around 79, it would be interesting. Their PPO is positive, and they have been since the beginning of May. Relative strength and momentum is outperforming the S&P 500. The accumulation about a week or so ago was at a 52-week high. The money flow's been positive since the beginning of June. If you look at the entire year, they spent most of their time, I would think, in positive money flow. They're outperforming the S&P 500 by 163%. The technology sector at 152%. They are in the computer services. That doesn't sound right to me.
No, they're more financials.
Yeah, so I will skip that. Uh, looks like Stock Charts has them in the technology sector,
It
so
is
I'll
a
skip
You
that.
could say it's a fintech, but they're granting credit, on the spot.
Yeah, so it's probably one of those fuzzy areas. I would wait for a pullback here, and it looks like the market is doing the same thing right now. We have a candle with a long upper tail. So a lot
Mhm.
of excitement, and then it's pulling back, still above where it opened, but not anywhere close to the high. But we're still early. It's 9 o'clock, so we've only been open 30 minutes. I would wait for a pullback if I were buying.
Yeah. Yeah, Webull, one of the lanes that I like to stay in, right? One of the principles that I like to follow is invest in something that you understand. You can understand the risk, you understand how to make a good investment, and then follow your qualitative assessment. My qualitative assessment on a firm, qualitative being is like the big picture is I think they're doing well for the moment, but these are stocks that sell off, really fast when you have bad economic indicators like from the macro economy. If we see that oh, the inflation rate is going, the unemployment rate's going up, and these guys show any sign that they have a higher default rate than expected, whoa, these stocks sell off fast. So I'm like, these guys may be successful. I don't know how big this market's going to be. Um, I'd rather own something that has a little more muscle behind it. That's why I went with, and I could say that I'm with Mercado Libre. Mercado Libre does fintech and it does e-commerce as well. So it's not like, it's going to get completely destroyed if it has some write-offs. But a firm will get, that stock price will get punished if it increases its write-offs. That's my big concern about them. I could be wrong, but I'm going to follow my logic because I depend on it, and we'll see. I'll be a student of the game and continue to look at a firm.
Yeah, if we look back a couple of years, we can see in 2024 that it cut itself in half, basically, over half in
Okay.
about 8 months.
Yeah. So I've got a couple of requests. First one is Barrick Mining. I think they do gold mining. And then the other one is from Shadow Guy looking at Occidental. And Ben 10, good to see you.
So Oxy is trading above its major averages. The 200 day is declining, the 20 and 50 day are increasing. Looks like they're up about 0.75% today, nearing overbought territory, which once again, they don't spend any time in overbought. They pretty much reach it, and then start pulling back. So it looks like they, if that continues to play out, that they'd be reaching maybe a little bit of resistance here. That'd be something to watch. This 5-day moving average has been on quite a run here the last week and a half. PPO is positive and looks to be expanding its momentum. The relative strength and momentum compared to the S&P 500 are both exceeding that of the S&P 500. The accumulation distribution doesn't look very good at all at the moment, and
Mm-hmm.
it looks like it spent most of its time in the past year in distribution or with negative money flow, although it is positive now and looks to be growing some, and looks to be underperforming as far as the S&P 500, the energy sector, its industry group, and the industry group is underperforming.
Mm-hmm.
So
Yeah.
yeah, I don't have a whole lot of
Oxy,
hope for this one.
if oil jumps up $10 per barrel, Everybody's going to jump on the Occidental train. Warren Buffett's a long-term holder. I own some Oxy shares. Also own Chevron. And today oil prices are down and Occidental's up. It pays a 2% dividend. And this is one of those things, you know, in a portfolio, some people like to own gold, which we're going to talk about Barrick in a little bit. I like to own oil because oil tends to be, when everything falls apart in the economy, very often it's like you have high oil prices, you have high unemployment, you have some of these like bad economic, conditions. And oil stocks tend to really do well when everything else is bad. It's kind of almost like a contrarian safe stock. So I don't own a ton of it. I own a little bit of it. And it's had a good month. It's had a terrible year. And, I like to buy stocks when nobody wants to buy them. I'm not going to buy anymore. I already have enough Occidental. I already have enough Chevron, but I'm not going to sell any shares. I think it's a good stock to hold. I'll let my other stocks perform. I'll hold this one. I'm good to go. And Occidental is a good company. They're an explorer. They find the oil, extract it, and take it to the market. They don't process it. They're not a midstream processor, and they're not a downstream distributor of the petroleum product that comes out of that. They just find it and take it to market. So they are a pure play oil explorer, and I think that's it could have some good years, but right now it's not having a good time. You see where it really jumped up. This is high oil price territory. Oil prices went up, and boy, Warren Buffett looked like a genius. He is a genius, but this one went from $9 a share up to low 70s. So it looked great for a while. So that's Occidental. Let's talk about Barrick Mining. I think they do gold. I've never been a big gold guy. But boy, maybe I should be, huh? Year to date, 70%. 1 year, 32. 5 year. Look at that chart. Interesting. So gold just wasn't going anywhere for a while. Then we got into 2024. Inflation was a reality, and this stock really has done well. Barrick Mining Corporation engages in the exploration, development, production, and sale of mineral properties. The company explores gold, copper, silver, energy, materials. Okay, got it. And if they do copper, that's a second plus, right? Gold most definitely is a plus, but copper, geez, the world doesn't have enough of it. Continues to have high demand for copper. These guys are a $44.86 billion market cap stock. Man, I got to write myself a note that next time this thing comes down like this, I got to buy some shares. Kind of like my position in Oxy and Chevron. Just have a position there because, I like diversification. I currently have some mining stocks, but none of them explore for gold. I have miners that explore for copper, iron ore, those kinds of things. Even one that's just pure play metallurgical coal, and that one's done well. But maybe this is a good idea. So this is market cap 44.86 billion, revenue of 13.8, and it pays a dividend of 1.7. That dividend is it's a very different dividend rate. If you bought at 15, geez, your dividend's probably 3.5%. The company's been growing because oil, I keep saying oil, I apologize. Gold prices are up, and it's been a good couple of years for these guys. They are doing well. If oil, I said oil again, gold prices drop, their revenues drop. So these guys are going to be pretty much dependent on the commodity of gold, copper, principally gold. Gold goes down, so do their revenues. So these guys are going to follow that gold pattern. What's what's my best guess on gold? My observation is the economy is getting better. I don't think we have a big unemployment problem. I think we have unemployment, but it's not like a giant problem. I don't know that we have some big problems. I think the tariffs are being resolved. It's kind of been like the tariff situation 7-8 months ago was quite alarming because the U.S. took a very strong stance, and it was like, oh man, if we get into a tariff war, that is going to disrupt the economy. And then we kind of got through the big, sell off, and it was like, well, we're not going to go over the cliff. We're just going to be near the cliff and observe the view from the cliff. And I think the stock market then realized, okay, we're not going to go over the cliff. We're not going to go into a trade war. We're going to work things out with all these countries. And I think that is going to, I think it's just going to be an environment of negotiation. I think we're probably going to announce that we have an agreement with China, I don't know, in the next 3 to 6 months. We're going to have agreements with our primary trading partners, and then we're going to move on. The government's going to be collecting some tariff money, which I don't know if it's going to be good or bad, but at least we'll have some income to pay for some of these services that are provided to citizens, and we'll move forward. So back to gold.
I did see a chart this morning that central banks now hold more gold than U.S. Treasuries. And that's the first time since 1996, I think.
So educate me. What's the difference, central bank versus U.S. Treasury?
Central banks from around the world. So,
yeah,
the European Central Bank or any of the central banks in any of the other countries, they either can hold treasuries or hold gold or a mixture of both. They're actually holding more gold collectively right now than U.S. Treasuries. First time since 1996.
Interesting. Ben 10 has a comment that it's fun to hold gold in your hands. I'm sure if you put like a gold bar in my hand, I'd be like, whoa, this is pretty cool. Especially if it weighed a lot, like if it weighed 20 pounds or something. Be like, whoa, man, look at this. How much is this worth? Oh, you're holding $200,000 in your hands. Wow, this is kind of cool. That would be interesting. All right, so we got comments coming in fast and furious. So we went over Barrick Mining. Thanks for asking about that. We went over Oxy. Let me see if I can catch up on comments. I apologize if I'm slow on comments. Mike, the dividend investor guy. I've got my gold ring too. But that's as far. That's my gold holding right there, and it's a long-term hold. It'll be actually coincidentally my wedding anniversary Sunday, 29 years. So 29 years.
Congratulations. That's awesome.
Thank you. Okay, so and I think I'm kind of picking up a comment on top of a comment. So thanks guys for showing up. Mike, Shadow Guy, Ben 10, James, good to see you, James. There's a good documentary on, I don't know if it was Netflix or Amazon. It was on This this guy from Ohio, he was really smart. He'd never been a sailor or anything, but he charted um he got investor money and he went after one of the biggest shipwrecks that was never located, and it was in the deep sea, and they ended up finding it. And it was interesting to see how things played out. Wasn't a happy ending, but it played out quite interestingly. All right, so we talked about Oxy. Mike is selling out of CNC, and CNC is a healthcare stock, if I recall. Centene. Centene operates as a healthcare enterprise that provides programs and services to underinsured, uninsured families. These guys are going to get a lot of their funding taken away. The big bill is taking a lot of funding away. So I would think that these guys got, yeah, the big bill came out and sorry, guys, but you're going to need to find funding other than the US government. And that's what really drove the stock down. I don't know if the situation is going to change for years. Their revenue was growing nicely. They've had positive growth all along, but the prospects don't look good for these guys. I think they're going to have revenues come down, probably go negative on the growth rate. That would be my guess. I don't know Centene all that well. I wouldn't go into this space. I think it's a space that has just got a lot of headwinds to it. Don't know if it's going to do well. So I don't know if it's worth selling at this point. I wouldn't be buying. That's kind of a personal decision there. It's certainly, fallen off a cliff there. Went from 56 to 28, so you're 50% decrement in 2 months.
It was 40% in one day.
Oh man!
So the other 10% was a slow bleed off. I own this one. That first day was rough.
Yeah, I've been there. Not fun. So Fubo TV. Now, is this the company that was getting acquired? So wasn't Fubo going to be acquired by somebody? Yeah, here it is. Here's the acquisition announcement. Why is this thing kind of like acquisitions typically get announced and then it trades near its acquisition price? So why is it trading down? That's weird. This is a small cap, even after that big rise. It's a small cap, and they continue to grow. Although the last quarter, they had a decrement in revenue. I think they're profitable too. Whoever owned this before they got acquired, for this announcement, congratulations. That's a good one. I think it went up from $1.26 to $5.46. Now, I've been here where my stock got acquired, and there's a big decision you have to make. Do you sell like the following day, or do you stick around? Because sometimes let's say a stock, Activision, to keep things simple, they said, okay, we'll acquire Activision. Microsoft said we'll pay you $70 a share. I forgot, the shares were like at $45 or something. And the next day, the stock traded at like $69. I'm not being totally accurate. I'm just giving you a general kind of, this is where it kind of resembled. So the following day I sold. Okay. Take the win. We're done. And other investors hung on and were like, well, I want the additional 50 cents. I think it was like at $69.50 is where it was priced, but the acquisition price was 70. And I thought, this thing's going to take a year, maybe a year and a half. And it's Microsoft. For all I know, some government's going to say, no, we're not going to allow it. And then boom, you went from 69 50 to back to 45 or worse. So no thanks. I'll take the win. And I would have played this one, putting myself in the shoes of Fubu stockholders. I would have sold this thing the moment the news was announced. And it would have been a good idea because from that point, the stock's lost a little bit, not more than a little bit. It's lost $2 a share. And that's saying something there. It's like a 40% decrement. Any comments on Fubu?
None for me, Victor.
All right. All right. Let's take a peek at the stock market. I think I caught up. And thanks, everybody. Thanks for the comments. Thanks for tuning in. And I think Genetics Smite, good to see you. Thanks again, Meredith, for becoming the latest channel member. Appreciate it very much. Let's take a peek at the stock market, see what we got in store for the last day of trading in August. Looks like Nvidia is coming back a little bit. It was down about 3.4%. Now it's down 2.76.
I sold my option.
You did?
Yeah.
You made some money?
Oh, yeah.
Nice. You got some walking around money this weekend?
Yeah, I could buy a dinner with it.
Nice. Very good. Meta is still down. Google is still holding its stock price. Things are beginning to kind of revert back to yesterday's price a little bit. And then the software application space really, it was green when we looked at it an hour ago, actually about 45 minutes ago. And now it's only a couple green spots and some red spots and some gray spots. So interesting. Overall, what do we got here? We've got the Dow is down 0.46, S&P is down 0.68, NASDAQ's down 1%. The Russell is down 0.4. So VIX is up. Do you track the VIX? Have you been tracking the VIX lately?
Every day.
What's your observation of the VIX? What's it telling you?
Let me go and pull it up real quick. Last time I looked, it was actually not every day. It was actually a couple days ago. But there wasn't a whole lot of fear in the market. It's increased a little bit today, but we were down to 14.2. This is 6 months. Let me go out for 1 year. We had been as low as 12.77 back in December of last year. So after this big spike on April the 8th, which was huge, we have made our way back down under 20. I have a dotted line at 20. I think anything below that is the market's not very fearful.
Yeah.
And when it's below, 16 or 15, it's really not fearful.
Mm-hmm.
So I don't see much fear built into the market at the moment.
I have to agree with it. I don't see any big scary story out there. I think we're fine until something comes up that causes a lot of fear. Right. All right. So why don't we land the plane there? Thanks everybody for tuning in. Any last thoughts, Daryl?
No, I just Monday is a U.S. holiday, so the U.S. markets are going to be closed for the most part. The bond market, the stock market, Bitcoin is always open. The futures market will be open with some limited hours, but for the most part, the U.S. markets will be down on Monday.
Yep. And today will be the last trading day of August. It'll be, I'll do my accounting on Monday of my portfolio. I like to measure performance and keep an eye on my year-to-date performance, and I'll do that on Monday. And then start on September's trading. September does bring sell-off seasonally. Um, as we just tracked the VIX, there's no big like scary story out there, big area of concern. Just generally, we do have high stock prices, but that in itself, is it going to cause a sell-off? No, but can it be an added fuel to a sell-off? Absolutely. If we
The
have,
only the only story I've heard that is something maybe to think about is September 15th is tax day for corporations, and there could be some liquidity issues in the middle of the month, next month. That's the only story I've heard that is fearful at all.
yeah, I don't think that's a big ugly story. Usually businesses are reserving that money, right? They know that,
Yeah.
hey, we're going to need to pay our taxes, so they would pay it. I'm thinking more of like, you know, I don't know that tariffs can become that ugly story again. But it could, but it probably take a couple players to be at each other's throats. Like China all of a sudden says, hey, you know what, we reconsidered, and we are going to do something hostile from a trade perspective against the US. Okay, but that can kind of really ruin things, because that's a huge trading partner. It could really impact us. There's no big earnings coming up. I think we're done with earnings, big ones. The biggest one just got done on Wednesday, so there isn't any big earning worry. Like, oh wow, if so and so doesn't come out with good earnings, it's going to impact the whole market. Nvidia put really good earnings out there, so the data center is still very prosperous. It's going to be interesting to see how AI continues to evolve. Um, that could be an exciting story. It could stay exciting, I should say. I'd like to see more use cases reach the consumer. I get OpenAI. I get Gemini. Okay. I use it on my phone. That's cool. I use it here or there. But I'd like to see a use case that makes my head explode with excitement. Like, wow, I didn't know they had a application that does this. And man, people can't live without it now. That would be interesting. Or, Home Depot selling cameras, that do something super cool with AI, or Home Depot does something super cool. Got to have it. That kind of thing. I'd like to see some of that happen soon, because if not, why are they doing all this AI stuff if there isn't going to be any benefit that we can see? I'll begin to get concerned that, hey, the AI spend doesn't match the benefit that I'm seeing and I'm observing. And it'd be interesting to see. Or maybe a business comes out, a business announces, hey, we now, Allstate Insurance announces, hey, our claims process went from a week to 10 minutes because of AI. And this is how. And customers are really happy with it. Like, wow, yeah, I submitted my claim to Allstate on the app, and within 10 minutes, I was told, this is what we're going to send you. We're going to wire it to your bank. You're good to go on your car. That kind of thing might be really interesting. We'll see. All right, sir. Well, thanks so much for streaming with me this week. We had 4 streams altogether: Monday,
Yeah, it's my
Wednesday, Friday.
pleasure, Victor.
That was really cool. Next week, Monday, not going to happen. I don't think anybody would attend, but maybe we could stream again on Wednesday and Friday next week if you're available.
Sure.
All right. Awesome. Thank you, Daryl. Well, you have a
Thank
good day and a
you.
nice weekend.
You do too. Everybody that's enjoying a holiday, have a great one. The rest of you, enjoy your shorter weekend.
Thanks, Daryl.
All
Have a nice
right.
weekend, everyone. Take
Take
care.
care. See you later.